What's going on, everybody? Tiger here. Going to get back into some more of these more longer term videos to kind of go through some top setups, some economic data, some fundamental analysis, technical analysis, sentiment analysis, all the good stuff that moves markets. And this is going to be my first video on my brand new channel. So yeah, definitely just check in from time to time if you guys can. If you're just curious to see what's moving in the markets, maybe what I'm trading, what I'm looking out for. But yeah, my username is going to be Trade Like a Tiger for this website, for YouTube. Also got a Facebook page, an X page, a brand new Instagram and TikTok page. So I created all 5 of these pages last week. I put my first shorts video up just the other day. So I'll get into add some more of those from time to time. But yeah, Sundays and then also Tuesdays is all about a little bit longer form videos. So like I say, I'll try to keep it to about 15 to 20 minutes, maybe 30 minutes. Just depends on how much caffeine I've had. And then, yeah, as far as those shorts goes, like I said, it'll be just topic of the day, the topic du jour, if you will. Okay, 45, 60-second video on whatever the big news of the day is or market moving events. So, or what trade I'm in, whether it's a winning trade or a losing trade. Okay, we're all about transparency over here at All Out Prime. So I'll definitely show you the winners, but I'll also try to show you the losers as well, just so you can see what potentially happened. Did I break my rules? Did I obey all my rules and it just happened to be a small loss? Whatever the case is. So that'll be the point of that. But yeah, let's get started real quick. I'm just taking a look this week at, and by the way, what you're seeing in my background is our YouTube channel, okay, our company's YouTube channel for All Out Prime. So we're actually moving all of our live streams to this page. So for you guys, you can just simply go type in All Out Prime Official in the search engine, or just like you see up top here, youtube.com/@Ola Prime Official, and then you'll find it. You just click on the live button here. You can see we put our first couple videos up, myself, Coach Richard, in the morning, Coach Adelina. Okay, so this was Friday. We'll start adding all of our lives on here as well. So not only me, not only us, but the rest of the futures coaches as well. So just wanted to show you guys that real quick. And without further ado, let's take a look at the economic calendar coming up. So this is going to be the high impact events that you see in red, otherwise known as the red folder events. The releases that are most likely to get some volatility out of those particular currencies. As always, I trade the 8 majors. Okay, the US dollar, the Canada dollar, the Aussie dollar, the New Zealand dollar, otherwise known as the Kiwi. Canada dollar is also called the loonie. Okay, I trade the British pound, which is pound sterling, or the cable as they call it, pound dollar pair, right? So pound, British pound, the euro for all of the Eurozone countries, and then the Swiss franc, and then the Japanese yen. So it's those 8 major currencies, the ones that really move most of the markets. So yeah, just taking a look here at the economic calendar for today. Today is Sunday, by the way, November the 30th, last day of the month before we begin our push towards Christmas. Are we going to get a Christmas rally like we typically do? Well, we'll just have to wait and see. But yeah, as far as today goes, looks like Governor Ueda over in Japan's flapping his lips here in a couple more hours rather. I guess it is 5 p.m. almost Central Standard Time. But at 7 p.m., 7:05 p.m. rather, Central Standard Time, Governor Ueda will be flapping his lips. So I'll definitely get a readout of that, see if I can't pull out a bullet point or two and maybe throw that in on my shorts video tomorrow. So that'll be what I do tomorrow. But as far as Monday, okay. Oh, and as far as that Governor Ueda speaking, it's going to be interesting to see if he touches on the dreaded I word. What's the I word? Intervention. Okay, that's what Japan is known for. They do have a way of manipulating their currency, the Japanese yen, quite a bit if it gets too expensive, if it gets too cheap. If you look at the USD JPY currency pair right now, I mean, it's just the yen is quite weak compared to the dollar. It's at some pretty high. It's at some highs. Okay, some recent highs. So we'll take a look at that here in a moment. But yeah, it's going to be interesting to see what he says during his lip flapping session, right? So, but yeah, just starting the week out tomorrow, Monday. The U.S. dollar does have the manufacturing PMI, so that's the Purchasing Managers Index. Okay, that number is going to be released at 9 a.m. Central Standard Time. Looks like they are forecast to go up about 0.3 points from 48.7 to 49 even. That is still under the 50 level. Okay, 50, anything under 50 for that particular report, and a few others on this sheet here. Anything under 50 is typically contraction territory. So you really like to see those numbers, depending on what report it is, to be over the 50 mark to where it's more of an expansionary number. But that's what we've got for the U.S. dollar. And it looks like, again, that now if that comes out true, that 49 number or anything above the 48.7, right, then that's obviously good for the U.S. dollar. That would be good for the currency. Anything less would be obviously negative or bearish. So that's the main headliner event tomorrow. We do also have the manufacturing prices, and then the RBNZ. That's going to be the Reserve Bank of New Zealand. Governor Bremen will be speaking and flapping his lips, like you see there at 3:10 p.m. Central Standard Time, followed by Fed Chair Powell. Okay, lip flapping session from him at 7 o'clock. So it's always interesting to see what he has to say. It's like watching paint dry at times, just watching him speak. People like to see what color tie he's wearing to decide if it's going to be a dovish or a hawkish type of a speech, right? So that's always market moving. It's on here as a orange folder event, which is typically medium impact, but you just never know what comes out of his mouth moves markets. Okay, just like the presidents, just like the premiers, just like the prime ministers of all these major currencies. Anytime they speak, we like to listen, okay, because their words literally move markets. So, but yeah, that's tomorrow, followed by Tuesday. We got Aussie dollar gross domestic product going to be released at 6:30 p.m. Looks like they are projecting a 0.1% increase, which is a good thing for the Aussie dollar if that comes true. Okay, so we could potentially see a little bit of a bump up on the Aussie on Tuesday. Jumping into Wednesday, Swiss franc is going to be releasing their consumer price index number at 1:30 a.m. Central Standard Time. Looks like that is projected to be just a tad bit higher as well. As always, inflation numbers, whenever they come out higher than expected, then that's good for the currency. Okay, but it's negative for the stock market. It's negative for our pocketbooks. Putting gas in the tank, buying groceries, right? Things of that nature. It's kind of a double-edged sword with inflation. It's good for the currency when it raises, but it's bad for the stock market and the pocketbooks. But on the opposite end, if it comes out and misses expectation, it's less. Well, it's bad for the currency, but good for the stock market and our pocketbooks, right? So you can't please everybody with the inflation report. But yeah, that is what's coming out for the Swissy again at 1:30. U.S. dollar 7:15 a.m. is going to have the ADP non-farm employment change number. Looks like that is a projection of a little bit less than the previous reading. That could potentially be a little bit of a drawdown in the U.S. dollar if that is the case. And then followed by 9 a.m. Looks like we got the ISM services sector. Okay, the PMI, the Purchasing Managers Index, coming out. Now, as you can see, that's an expansionary number. It's over 50. Okay, now it is 52.4 the last reading, as you see, but they are projecting it to be 0.4 less, so that could potentially be bearish for the U.S. dollar. All right, moving on to Thursday, we do have our weekly unemployment claims number coming out for the U.S. dollar. You can see there the previous number was 216,000. Looks like they're projecting a 4,000 increase, okay, in unemployment claims. If that is correct, then that's potentially bearish for the dollar. Okay, we don't want to see more and more unemployment claims coming into the system, because that just typically means, if you got less people working, that's less people spending money in the economy. So that could potentially be bearish. And then rounding out the week, Friday, Canada, U.S. dollar. Okay, they've got a couple events coming out. Canada, 7:30. Employment numbers for them as well. The employment change and the unemployment rate. Looks like employment change, that could potentially be a bearish number for the Canada dollar. And then the same thing with the unemployment rate. You guys can see right there, okay? The previous number was 6.9%. That's pretty high, okay? That's pretty high. So they're expecting it to jump up to the 7% range. So again, less people working, less money going into the economy for Canada. So that could potentially be a bearish number, a bearish reaction. And then finally, the U.S. dollar, we do have our University of Michigan Consumer Sentiment Report coming out at 9 a.m., as well as the government, or the Fed's favorite way to see how the economy is doing, and that's the PCE price index. So Personal consumption expenditure, that's their favorite gauge of inflation and just the overall health of the market. So looks like that one's projected to stay the same, 0.2%. That would be a wash if that were correct. So as always, guys and gals, looking at these economic events is just like watching the meteorologist and getting the forecast for the weather, right? They get paid all this money, but they're quite often wrong. Okay, and that's the fun part about missing expectations or exceeding expectations on all these economic reports, is because if they actually get the numbers correct, ho hum. It tends to not move markets a whole ton. But if they miss high or if they miss low, well, that's when you start seeing big swings, volatility in the markets. Okay, I love those volatility swings because they typically want to travel to my favorite way of trading the markets, which is some higher time frame supply and demand zones. Okay, everything rises and falls based off the balance of supply and demand in any given market. So that's where I personally like to capitalize, especially when we have misses or exceeding on these reports. So that's a little bit about the economic calendar. Just taking a look at the top setups, guys. Right now, oh, and before I get to the top setups, actually, I wanted to show you guys the economic surprise meter. With all of the more recent reports that have been released, the economic calendar, okay, the strongest currency right now is the Aussie dollar. Look at that. It has exceeded expectations on every single one of its recent economic reports. Okay, so that is the strongest, and here's why. Because if we go take a look at the Aussie's economic heat map, you guys can see right here in this column. Okay, everything's bullish. Everything's been exceeded. Okay, the growth numbers, the PMI numbers, the inflation numbers, the employment numbers. Every single one of these has beaten expectations. So we have a previous number, we typically have a forecast, and then the actual number that comes out. Okay, so just picture this forecast, right? Whenever the meteorologist on the news channel, they post, hey, tomorrow's going to be 50 degrees, right? Tuesday is going to be 55 degrees. That's this column here, right? But when the actual number comes out, okay, that's all that really matters. And those are the numbers that when they're either real hot or real cool compared to the forecast number, that's what moves markets. But yeah, Aussie dollar's kicking ass. I got to be honest with you, because again, they're beating every single report. 100% impact rating. Okay. So just going back to that surprise meter, again, we got the Aussie #1, we got the Canada dollar at #2. Okay, so it's 83%. So if we take a look at Canada's numbers real quick, you can see that it's had a couple little blemishes on here. It did have a bearish inflation report for the consumer price index, which is negative for the currency, the Canadian dollar, but it's good for the stock market, okay, the Canadian stock market. And also the citizens of Canada's pocketbooks, right? So that's a good thing. That's a good thing, but a bad thing at the same time, right? Again, the CPI, the PPI, when it comes to the consumer price index, the producer price index, what's good for the currency is typically negative for the stock market and vice versa. So, but yeah, you look at this, they've got that one blemish on the CPI and then a couple neutral ratings for the retail sales and the GDP number. Now, you guys can see the neutral there. That's simply because they met expectations, okay? GDP forecasted 0.2%, actual 0.2%, so they nailed that one, okay? But they only did that on 2, and then again, 1 was bearish, but you had 5 other reports that exceeded expectations. So that's why the Canada dollar, in my opinion, is the second strongest currency right now. And then as far as the third, you got the New Zealand dollar sitting there at 67%, okay? So the U.S. dollar is not too far behind it, and same thing with the yen. But they're a little more, a little more what I would say is neutral. It's not like super hot or anything, but hey, I'll still trade it if I find a good supply and demand zone on one of the pairs. That's relative to it. So that's the strong ones. What's weak right now? Well, look at that, British pound, really weak right now. Okay, it's only exceeded expectations on 29%, and then the euro is right behind it. Okay, 33%. So in my opinion, those are 2 of the weaker currencies right now when it comes to economic data or fundamental analysis. So let's take a look at the UK economic heat map real quick for the British pound. And here's why, guys. Look, it's missing expectations on all these reports that you see here. They've had a couple good ones, the manufacturing PMI, the PPI, okay? But they had a neutral inflation report for the CPI. It nailed expectations right on the dot, 3.6 to 3.6. But other than that, when you're looking at the GDP, okay, gross domestic product, how much money is flowing through the economy, the services PMI, the retail sales, PPI, which is producer price index, and then of course the employment numbers, they're all missing expectations. So you add all that together, and that's why it's the weakest currency. Okay, it's missing all these reports. So that's that one, and then the other one, let's see, the other one was the what was it? Yeah, the euro. So same thing over here on the euro, guys. Okay, it's got a lot of neutral. So this is where the weatherman's actually been pretty accurate overall, is for the euro. You see a bunch of neutral scores in the currency column right here. That means they've met expectations on all these. Okay, CPI, PPI, the employment numbers. Um, but you've only got one bullish item, and that's the services PMI. Okay, it's in expansion territory, so that's a good thing. But again, that's just one piece of the puzzle. I like to take all this data into consideration for fundamental analysis when I'm looking to decide if I want to go buy or sell something. But yeah, you got the two negative ones, which is the retail sales manufacturing PMI. So you add all that together, 33% euro impact, second worst or second weakest currency, second most underperforming currency. Okay, let's put it that way. Economic underperformance versus outperformance. So basically what I'm getting at is if I look at this, okay, just these speed gauges here, as Coach Richard calls them on my stream, any chance I get to buy the Aussie dollar, I'm going to jump on it. Okay, that's my number one goal, is buying the Aussie dollar. And then also selling the British pound, okay, because again, it's the weakest, 29%. So if I could find a trade between the pound Aussie currency pair, okay, that'd probably be my number one go-to. So anyway, that's a little bit of a look at that. We'll take a quick look at the top setups. I'll try to keep this video fairly short for this first one, but I'm just, playing around with the timings, playing around with my calendars and charts and such, just to make sure that I don't go too crazy. I got to leave something for my shows, right? But yeah, just, by the time you take all this data and calculate it out into the currency pairs, this is kind of how the top setups looks. Okay, again, Aussie dollar, strongest currency. I just showed you guys that, 100%. It's exceeded expectations on every single one of its main economic reports. So it's no surprise to me that I'm seeing the Aussie dollar up here at the very top. Okay, as far as very bullish, meaning I need to go time this trade on a chart. I need to get on a chart and go find a place to buy into a demand zone. Okay, so that's goal number one. So Aussie dollar, Aussie yen. You got a couple other Aussie pairs down here: Aussie Swiss, Aussie CAD. Okay, those are the main ones. And then I imagine if I go down here at the bottom, yeah, I'll find also the pound Aussie, because Aussie on this one is the quote currency. Okay, British pound is the base currency. Oh, get my head out of the way. There we go. British pound, you guys can see this. Okay, that's the base currency. Aussie dollar is the quote currency. So by shorting this currency pair, that means I'm buying the Aussie and shorting the pound, right? We just saw how the pound was one of the weaker currencies. All right, let me see if I can move this over. Hey, there we go. There we go. Now I don't have to move my neck, but you guys can see, right? So that's going to be the top few shorts right there. Pound Aussie, pound New Zealand, pound CAD. Okay, that's my favorite ones right there. Okay, if I don't find anything good in that immediate in those supply zones, then I'll just keep going up the list. Okay, as far as the shorts go, the weaker the better for a short, the stronger the better for a buy. Okay, so I'm just going to take a look at a couple of these, and then we'll get out of here fairly early. Aussie dollar, let's just take a look at it over here on a chart. Okay, Aussie dollar, again, this is my strongest buy, strongest bullish bias currency pair, Aussie US dollar. So let's go see if we can find a demand zone to buy into. Now, just zooming all the way out, okay, when in doubt, zoom out. Zoomed out to a daily time frame. I just turned off my drawings just for a second, just so we can take a look at this thing overall. Okay, now if you look at this pair, we've kind of been in some weird, funky sideways action for quite a while. Basically since like the beginning of May. Okay, we had that Liberation Day drop and reaction, okay, from the Trump tariffs, the Trump tariff threats on a lot of these currency pairs. But you can see it's rebounded nicely. It's just kind of gotten kind of boring. I mean, it's had a couple spikes up, and all that, but it's still relatively within this sideways price action. So the idea is I'd be wanting to buy at the lower end of this. So if I turn my drawings on and I look and I find my first daily demand zone, it's going to be this candle right here. Why is that? Well, because when you go to the next candle, we got a gap, got a nice gap above it. Okay, from the top of this candle to the bottom of this candle right here. Okay, this leg out candle was just really nice and strong. So I'm going to automatically want to wrap a rectangle, a yellow rectangle around that candle. Okay, that's what I did. Okay, just like that. Okay, that's my daily demand zone. Now, my favorite all time look is a daily 4-hour demand zone confluence. So if I know I got a daily, I need to look inside of this daily zone and find a 4 hours demand zone. Okay, so I go down to my 4-hour chart, and here we go, right there. Okay, it's going to be that red candle right there. Now, same thing. I have a gap. I have a gap from here to here. Okay, I'm just going to color this white just so you guys can see. So that's a very strong gap. Okay, so again, it's the basing candle. You skip the leg out candle, and then you look for the candle after that, the low point. Okay, that's the gap. That's what they call the fair value gap. I don't really call it a fair value gap. I just call it an acceleration gap or a novice gap. Okay, or a runaway gap. I don't know. It might be a hot take, but I don't like the term fair value gap because there's nothing fair value about it, right? That's a huge inefficiency in the market. But nevertheless, I digress. That's going to be the first fair value. Okay, the first gap. If I delete that, why is that? Well, because if you look down here, guys, you see all these candles down here. Let me just do this. All these candles down here overlap the candles to the left and to the right of it. So that's what you call an efficient price action, efficient structure. Banks, the big banks, the whales, okay, the hedge funds, all those guys, they like to chase inefficiencies in the market. They have no reason to chase an efficient market down here. It's already efficient. But where's their first inefficiency? Well, it's going to be that gap. But not just the gap itself, the unfilled orders below it. That's going to be that demand zone. Okay. Again, I turn on my drawings and you can see it. Okay. Got that right there is going to be my entry point. Now you can see I put an alert already right there, 6.6476. But I like to refine it even further, guys. So we started with a daily. Now we went to a 4-hour, which is my 4-hour demand zone. I also want to go down to the 1 hour and just try to find a gap here as well. So let's just zoom in here. Okay. And just take that off for a second. So right here is going to be a gap to here. Okay, so this is our leg out. So this is our basing candles, leg out, and then the second one. So if I turn my drawings back on, you guys can see I've got a gap here as well, from here to here. Okay, there's my acceleration gap. Okay, so that again is showing an inefficiency in the market. Okay, banks tackle inefficiencies to go for the unfilled orders. So what I did is basically just refined it down to where I put a line on here, showing that this is my 1 hour demand zone candle. Okay, so I just wanted to kind of dig into dig in deep on this first one, just so you guys can see what I was talking about when I talk about confluence. Again, it starts with the daily 4-hour confluence, and then I like to just go down to a 1 hour or even a 30-minute time zone, whichever the picture looks best. But that's going to be one of my top setups right there. That's going to be my number one setup, to be honest with you. Zoom out, okay, back to the 1 hour chart. And the other thing too, guys, if I go back to my 4-hour, okay, this is the origin of this strong move up, right? Now, you'll see that if I look a little closer to current price, I've got another 4-hour demand zone right here, okay? Well, can I trade that? Sure I can. But there's a big stipulation on this one up here. Okay, down here, I'd be a little more comfortable treating that as a limit order, meaning I just set it and forget it. I set my order. If I'm asleep, okay, if I'm drooling on my pillow, whatever, it's going to get me into the trade, right? So that would be down here. What happens if it hits this demand zone? Well, I'll still trade it, only if it confirms itself, though. It's got to show me that it's trying to turn around. Okay, it's pricey. It's expensive up here. It's more expensive than it is down here, right? Well, it's got to prove it. It's got to prove itself. So basically, I would want to see price come down into the zone, get a bounce. Okay. Maybe it can go a little deeper, but on this next leg, I need to see this leg break this structure right here. So I need to see it come up to this area. Once it has broken this structure, then I just need to see it come down and find a brand new demand zone on a smaller time frame. Maybe a 15-minute, a 10-minute, a 5-minute, okay? Something like that. So it would basically look like this. Okay, we have broken this structure. Okay, broken that structure. And then if I zoom in a little, okay, in the creation or in the breaking of that structure, it basically needs to create a brand new demand zone right here. Okay, let's just pretend on a 15-minute time frame. 15, 10, 5, okay. Let's just pretend we had a brand new demand zone. Okay, come on now. My goodies just froze on me. Come on. Sorry, guys. Give me 1 second. Come on. What the heck is going on, you stubborn son of a gun? Got to reset it. Got to reload. All right, let's go back to Aussie dollar. Hopefully it didn't delete it. It did delete it. Okay. So let's just see here. No, it didn't. There it is. So here we go, guys. Okay. We've hit the demand zone. Okay. We've got a reaction a little deeper. Again, we broke this structure right here. Okay. This is what I have to see. I have to see this leg right here break that structure. Okay. That's showing me it's trying to turn around. Because again, it's high up on the curve. Okay. So it's got to prove itself. So as long as it breaks and closes up here, at that point, I'm just waiting on price to return to a brand new demand zone that would hopefully form right there. And this is my trigger point. This is where I'm getting into this trade. This is where I'm buying long. Okay. So so really I've got two options on this. Okay. It just depends on how price reacts. If price comes down to this demand zone and it just cuts right through it like a hot knife through butter, say la vie, adios, right? No worries, because I'm more interested in this one down here anyway, right? So it just depends on what it does. You guys can see I drew this I drew this here. My throat's tickling. Sorry, guys. So this one has proven itself, and this one down here, because there's no inefficiencies below it. Okay, on that 4 hour I was just looking at, this is more of a limit order. So I'll just set a limit order and let it do its thing. Okay. But if price is down here, I'm still going to probably just watch it and eyeball it just to make sure it still does something kind of similar up here. I just won't be as picky because I feel pretty comfortable about a potential limit order. So that is Aussie dollar. Sorry, let me clear my throat again. All right, so that's setup number one right there. Oh, and by the way, guys, I just realized I actually need to take my alert and move it up here. So there we go. There we go. So I got my alert set. Okay. All right, what else have I got over here? Aussie yen. Now, Aussie yen is one I made some money on last week. Okay. I think it was like 1,400 bucks or something. I believe that's what it was. Go double check. Yeah. So Aussie yen, okay, last week I ended up buying right here on this this was a 30-minute demand zone at one time. Now, it's an old one. That's why I deleted it or turned it black, right? Black for death, meaning it's gone. So yeah, what happened is we we came down here. Now let's just take a look at this zone first. Okay. 30 minutes. I was on the wrong time frame. Here we go. 30-minute candle with a gap above it. Okay, that was my gap right there. Okay, origin of a strong move up. All right. Wasn't the strongest, I gotta say, but it was a bounce. So basically, when price came back to it, I ended up getting into the trade as it was leaving this area. So if I just go down here, okay, I basically got in right about here as it was coming back up out of this little consolidation area. So I got into that trade and just rode it all the way up to the top. I mean, there was a supply zone overhead over here, okay, on a 2 hour time frame. No, it wasn't 1 hour. There we go. So I had a 1 hour supply zone, okay. That's this red box. So I bought here, and again, because the fundamental analysis is telling me to buy. Okay, it's a very bullish score of +11. Now, the last week it was the number one. This week it's tied with the Aussie dollar. So basically, whichever one of them hits another demand zone, I'm jumping on it. So what has happened is it hit my zone. I bought, and then I made sure and sell out of it once price got up here to this area. Okay, so what happened is we bounced into the supply zone. I was still in the trade, but as soon as we broke this structure right here, okay, as soon as we broke that structure, that's where I got out. So I sold out of my position. Okay, again, it was 14, what was it, 1400 and something. Go look over here on my other computer. I got 900,000 monitors over here. Where the heck did it go? Where did it go? Oh my gosh, how many charts do I have? No, it went down. Oh yeah, I got it right here. So it was $1,434. Okay, so that was, yeah. And I'll just copy this over just so you guys can see what I'm looking at here. Okay, I'll just copy this over here, and I'll paste this over here. Paste. Okay, so here's that chart. All right. So you guys can see all the way at the bottom down there. Okay, 1434. Obviously, subtract swaps, fees, that kind of thing. Came out to be 1408. But yeah, just got in right there again at that demand zone, and I sold out as soon as we broke this structure right here. So it was a really good week. I was really happy with that. I think I had another small win. I think I had one tiny loss as well of like 30 bucks or something like that. I think I had another one of $394, another one of $68, but this was the one that I was the most proud of. Okay, 1,408 bucks. So good stuff. But yeah, that was last week, but it's a brand new week. So what did I draw up earlier? And the market's open, by the way. It just opened about an hour and a half ago. New demand zone. Okay, you got this 4-hour demand. You got a nice strong push out. Turn my volume back on. Now we've pushed deeper into the supply zone. Okay, so I'm not too excited about buying right here because we do have more potential unfilled orders from the upper end of this 1-hour supply zone. Okay, now we bounced into the lower end of it right here, but this time we've went a little deeper. So I don't know. I'm not quite sold on trying to buy into this demand zone just yet. But what I may do is just wait till it comes down a little deeper where you see that alert is, okay? Because this is going to be my 1 hour. Wait, that's not right. Oh yeah, never mind. That 1 hour has been mitigated. I think it was 30 minutes. Yeah, 30 minute. So I have a 30-minute demand zone down here at the bottom of this 4-hour demand. So there's a little bit of confluence there with a gap. Now this gap ain't that big, I gotta admit. Okay, we're looking at this wick. Let me zoom in for you guys. Okay, we're looking at this wick. We're skipping the leg out candle and we're going to this wick. It's not that far. In fact, here is your gap. That's not that big. Okay, that's not that big. That's not a very strong move with gusto. I like to see moves with gusto. That's not the greatest move with gusto. So I don't think I'm gonna do anything with it. Plus, it's pretty expensive. Okay, the move was back here. Prices were cheaper down here. Okay, 100.60 pip. You know, the price was 100.6. Up here, it's 102.15. It's pretty high, pretty pricey. Okay, and hitting this higher time frame, overhead supply, probably just going to ignore that. What I would prefer to see is price to break through the rest of this supply zone, like this, close up here, and then retrace to the bottom end of this demand zone, this 30-minute demand. And you guys see that inclining white line there, that's a trend line. Nice confluence move like that. I would be happy to do that move, this trade, but it's got to show me this 30-minute demand zone has got to prove to me that it's strong enough to chew through the rest of this supply zone. If it does that, then I'll definitely be more interested in this move down here. Okay, so in other words, I have to sit on my hands. There ain't nothing to do yet. Ain't nothing to do. Okay, so that's all really for the Aussie yen. New Zealand dollar, Aussie Swiss. That'll be the last. I'll just show the last one, the New Zealand dollar. That'll be the last one I show for the bullish side. Then we'll take a look at a couple shorts, and then we'll wrap this thing up. New Zealand dollar. Okay. We got a daily. We got a daily demand zone here. Okay. This is going to be our yellow line. That's going to be our daily demand. And then you guys can already see I've got a 4-hour demand down here, which I'm going to actually, come on. I'm going to delete that and put it back on just so that the green part can show. Okay, so this will be the 4-hour demand inside of the daily. So that's a confluence. That's what I like to see. And then you guys see up here a little higher. We got another 4-hour demand zone. But which one is the highest probability? In my opinion, it's going to be this one down here because it's closest to the origin of this strong move up. And you see all these candles over here overlapping everything. Okay, that's a pretty efficient structure. That's efficient price action. The first inefficiency I see is from here to here. That's going to be our inefficiency right there. Okay, there's no overlapping candle. That's the leg out candle. And after this high on this candle, and then this low on this candle to the right of it. Okay, there's your inefficiency right there. This is your gap, your acceleration gap, your novice gap, right? Runaway gap, fair value gap, if you like to use that term. So again, guys, I personally want to see price come down. I don't even care if it chews through this demand zone. This will be another one, by the way. Okay, this is on that's higher up. This is another one that would have to prove itself. It's got to be a confirmation entry. Okay, something like this right here. If it does this, if it breaks this structure right here, okay, we form a brand new demand zone right about here somewhere. Okay, if we can do all that, okay, then we'd be looking to buy this. If it just chews right through that, no worries. I got a higher probability demand zone waiting on it. Okay, and it'd be looking something like that. Okay, so that's what I want to see. We go through the gap itself. We bounce into the unfilled orders, the potential unfilled orders. Okay, buyers and whales, larger traders. Okay, they can't just buy their full order down here. They have to accumulate it, right? So that's what, you know, they have to have orders. They have to have orders. Okay, they like to collect liquidity and unfilled orders. So that's the play I'm going to call right there. Okay, and that'll be my third favorite setup on the bull side. So that's the main three I wanted to show you, and then we'll just take a look at some of these pound shorts. Okay, again, remember the pound, the British pound, the weakest currency, the worst, the most underperforming currency, 29%. Okay, so we're going to take a look and see if we can find a place to short. Now, minus 16 is really, really strong bearish. I like that. I love this. So let's go find a place to short the pound Aussie dollar. Okay, what have we got? What have we got? What have we got? Okay, daily time frame. Okay, just higher time frame. Very slowly, lower highs and lower lows. That's what I like to see. 4-hour time frame. No real inefficiencies in this area, so I'd have to look above. Okay, now we've already bounced into this one over here. You guys see this red line that I made light red, just meaning it's already been touched. It's already been mitigated. Okay, that would have been a good zone at one time. Because if I go down to what was that, a 2-hour? Yeah, this was a 2-hour supply zone. Okay, that we're looking at this candle right here. Okay, strong drop, just almost came back and touched it, but didn't. But anyway, yeah, that was a zone I had drawn up. Now I didn't have that strong of a bearish signal up here. Okay, and we also had, you know, in a 4-hour time frame, higher highs and higher lows. So it would have been pretty scary trying to shorten this area, but it still worked. Okay. So again, this is my strongest bearish asset. So how do I short this damn thing? Well, one thing I do like, I'm going to delete this line out of the way. One thing I like is the fact that we've broken this structure here. Okay. We broke this. I'm going to delete that one a little higher up. Okay. So in the context of this recent uptrend that we had price break this low. Okay, and just keep going. So now we've got the lower lows trying to turn around. I do have a supply zone up here. I'm just going to be careful with it. I'm going to treat this with the same confirmation entry. Okay, just like this. Got to break that structure. Let's do this. Okay, got to break this structure, just like that. Break the structure, and then retrace and find a new supply zone. Because it's still too uptrendy for my taste. I don't really like the fact that the higher time frame is kind of, still just kind of, well, 4 hour time frame is still kind of up. I don't like that. So just gonna make it prove itself. I think I would really prefer to trade this thing if we broke another structure. Like say we, let's just say we come down here, break this structure, and then return and hopefully find a new supply zone to join the trend down. That's probably what I would prefer to see. But if price came all the way up here, I might take a short there on that what was that, 2 hour zone? I think it was. Yeah. But it's got to prove itself. Okay. So not my favorite, despite the fact that it is the strongest asset. That doesn't tell me to just go out and short sell the hell out of this thing right away. No. This is just the direction, but I still have to time it. Now, if I don't see a good place on a chart to time it, I'm going to skip it or just put an alert in until it does, jumps through a few hoops for me. Okay, I'm picky. It's got to prove itself. So we'll skip the pound Aussie. We'll just take a look at a couple of these, and then we'll get the hell out of here. Pound New Zealand dollar for a short as well. This is my second strongest bearish asset. Pound New Zealand. There you are. Okay, starting with the daily time frame. We got a daily supply zone all the way up here. Drop, and we've broken this structure, guys. You see this? This is a good thing. Okay, this was a swing low, and then we've broken that structure and closed below it. I like it. That means the start of something potential to the south. Okay, inside of this daily zone, what have I got? Got a 4 hour supply zone. That's my favorite confluence. Okay, so real simple on this one. Okay, just a simple retracement into that supply zone to collect unfilled orders, and we got a short sell in our hands, ladies and gents. We've already had price move at least. If I look at this as 1 unit of risk, okay, let's just call it. Ooh, that's a big zone too. So that's 106 pips. That's big, but it's moved. If I go to the proximal line of the supply zone down to this low point, it's moved 407 pips. So it's already moved 4 to 1. Okay, that's a 4 to 1 ratio. Okay, if this is 1 unit of risk, I've got 4 units below it. That's what I like to see. I like to see price drop a long ways away. I like to see it break a structure. That way, when price returns to this area, which by the way, I need to put oh no, I did have an alert. Okay, so I've got an alert there. Now I put that alert there because if I go down to a 1 hour, you guys can see a little 1 hour supply zone chilling and hiding right here. Let me turn my drawings off. Okay, see this green candle? Look at this big red drop. That's about as strong as it gets. So what I've actually done, guys, is even though I got my 4 hour supply zone clear up here, I got a 1 hour supply zone down lower, but it's still within the daily supply zone. So this is basically a 1 hour daily confluence. Now, ordinarily, I would probably just ignore that and just wait on the 4 hour, but I love how strong price dropped from this point, okay? From this point right here. Get that drawn up real quick. Okay, so there would be my supply zone. That's my 1 hour supply zone. So I'm just going to draw that as well. So I got a daily, okay, so a daily, I got a 4 hour, I got a 1 hour. Now the 1 hour is not in the 4 hour, but it is in the daily, and the higher the time frame, typically the stronger a zone is, whether it's the supply or a demand zone. So I'm gonna potentially get into that short there. Okay, I might even keep that I might even put a stop loss just above it. But if it just goes through it and fails, well, it's okay, because this is my opinion, the higher probability place for price to reverse anyway up here. So I would just get into that short and then make up for the small loss, and then just continue to, obviously to grow that trade. So got a couple options up here. If this zone fails, no worries. I take a small loss. I get into this one. This is the one that I think that should work out a lot better anyway. Okay, since it is the origin of this overall strong move down. Okay, so there's your pound New Zealand. Lastly, pound CAD. Again, this one's a -10. So we had minus 16 for the pound Aussie, minus 13 for pound New Zealand, and finally the pound CAD at a minus 10. We'll look at that, and then we'll get the hell out of here. Pound CAD, here we are, guys. All right. So higher context, higher time frame. Okay, we had a 1 month supply zone. See this big green candle here? Before this big red candle down, that's a 1 month supply zone. It's a monthly supply zone. So that's going to be that orangish looking rectangle. So we've been chewing through it for a while, really since since March, or since Liberation Day almost, right? Or maybe even a little before that. But yeah, we've just been chewing through that for most of the year. There's our weekly time frame. If I go down to my daily time frame, okay, I got a supply zone up here. This is the origin of this overall strong move down. So in my opinion, that would be the higher probability. Now, got a couple other ones on a 2 hour. Okay, so if I go from daily down to 4 hour, okay, you can see the 4 hour one up there. You see this one here, these two? These are actually 2 hour supply zones. Okay, I got one here, got one here. These are confirmation entries. You guys see I have an alert here. We've just missed it twice. This will be the final point, and then I'll close this video out. We have a double top right here. Okay, that means you've got liquidity above it. Okay, so just think of this. When these traders sold here, when they sold here, when they sold here, they sold here, price eventually dropped, they put their stop losses up here. Well, what's the opposite of a sell order? It's a buy order, right? So this is going to be their stop losses up here, their liquidity, okay? All these buy orders are just chilling up here from these short sellers that push price down. So what does a big bank and institution need to fill their sell orders? Okay, buy orders. So what happens is, as a result, okay, when price returns to this supply zone that we see over here, okay, and this is why I like this zone, because of all this liquidity. As the price is coming up, the banks are doing what? Right? They're selling into these buy orders, and then they're also taking unfilled orders from the zone itself. And then once they get their distribution complete, the bottom falls out of it, and this is how they make their money. Okay, so I love that. I love that for the pound CAD. We'll see what happens. It's already hit a demand zone down here, as you can see. It's just on a smaller time frame. I think it's a 1 hour time frame. Yeah, a couple demand zones down here. So we've already bounced into the one. So I very easily see price doing that. Coming up again, short. These are very bearish assets. So that's my top 3 bullish and my top 3 bearish. I'll be back again on Tuesday. We'll do another longer video like this. I don't know how long this one went, but we'll try to shorten it. Oh, 47 minutes. Oh my gosh. Well, anyway, guys and gals, lastly, just wanted to say I'm on Forex Fire Stream from 6:30 a.m. to 8 a.m. Central Standard Time. So again, guys, just go here to @OlaPrimeOfficial, find the live section. You'll see our videos. We got futures traders as well. We got stock traders as well. The show in total is 6:30 a.m. to 3 p.m. Again, that's Central Standard Time. So whether you like Forex like me, futures, stocks, a little bit of crypto spread in there, gold, silver, Bitcoin, okay, U.S. indices, come give us a holla. Holla at your boy. Have a good one.